Hey coin is having a rough moment today, slipping nearly 30% in the last 24 hours and dropping down to that 16-cent zone. But the story around this token is far bigger than just a red candle. What's happening with Hey is a combination of market volatility, sudden liquidity shifts, and a cooldown after last week's aggressive upward moves. A lot of people forget that Hey pumped hard earlier, so this correction is partly the market catching its breath and partly whales reshuffling positions. But despite the dump, the community isn't stepping away, and today's price action is sparking fresh conversations about where Hey is headed next. Across the broader altcoin market, you can already feel the shift, with smaller mid-caps beginning to regain attention as Bitcoin cools off slightly. Hey is benefiting from that same trend, because even though today is red, the trading volume is still strong, which tells you one thing: people are watching this coin very closely. A dump with volume is actually better than a dump with silence, because it usually signals repositioning rather than abandonment. And in Hey's case, that's exactly what we are seeing. Traders aren't walking away, they're preparing for the next setup. One of the biggest discussions around Hey right now is the upcoming ecosystem update the team hinted at earlier this week. There's talk in the community about new partnerships, improved liquidity routing for their platform tools, and a possible expansion into cross-chain infrastructure. While none of this has been fully confirmed by the project, those teasers have been enough to keep investors glued to the charts. Sometimes markets dump before major announcements simply because early holders take profit, and that's very much in line with how Hey has behaved in the past. Now, let's talk future price potential. With Hey sitting near 16 cents right now, people are already asking if this dip is an opportunity or a warning sign. Historically, Hey's support levels tend to form in these deeper correction zones, and if it manages to reclaim the 20 cents resistance again, momentum could build very fast. A short-term recovery back to 22 to 25 cents isn't unrealistic if the team rolls out updates soon or if market sentiment improves. And for long-term holders, the bigger question is whether Hey can push back toward its previous highs. If the dev team executes their roadmap and volume continues rising, retesting the 35 to 40 cents range later this cycle is definitely possible. But let's keep it real. For Hey to become a major breakout story, it needs stability, bigger exchange support, and stronger marketing to expand outside niche communities. The project is still early, and early projects move violently in both directions. That's why today's dump shouldn't be taken as a final verdict. In crypto, some of the biggest rallies start right after the ugliest red days, and Hey has proven before that it can flip sentiment fast.